Welcome one, welcome all, welcome to the seekers of fortune and the wannabe future trading superstars of this universe. My name is Doug, I'm with Trade with Doug, and today I will do what I always do on the weekend, which is take a grope in the murkiness, try to make some sense out of the stock market and other financial assets, and whatever I discuss today. The only goal I have here is just one thing. I hope by the end of the week you say, damn, that Doug gave me some good ideas. He's a good dude. Thumbs up to him. That's all I'm asking for. And if I've done that for you, put it down in the description box. Let everybody know in the comment section that you appreciate what I'm doing here. So let me begin with official hashtag Joyant, the official hashtag Jubilant, the official, geez, oh whiz, is this bear market ever going to end? How much longer? Hashtag, let's try to get that thing trending. So here's what I want to talk about today, guys. By the way, if you want to trade with me, it's down in the description box. Here's what I want to talk about. Nobody, not me, not the greatest trader you know, not Warren Buffett, Ray Dalio, George Soros, the legends of all legends. Nobody knows when this market correction is going to stop. Because you know what? What happened in the past does not have to happen in the future. And the reason I'm starting out with this, I see the hums on the social media. I see people saying, I got to buy this. It's a great company. It's oversold. This is oversold. I got to buy it. It's gone down long enough. I got to buy it. Now, it's not a bad thing for us to look at history because history, in fact, does repeat itself. But what happened in history is only a benchmark since none of us can legitimately predict the future, right? None of us can do that. So we rely on history to give us some clues, but it doesn't have to be that way. We don't have to follow a script. The market doesn't have to bounce every time off the 200-day moving average. You don't have to get a rally at negative 20 or 25%. 30% doesn't have to be normal. If it wants 50, it sure can. Can it give back 80? That sounds crazy, but why not? There is no script. And the reason I'm saying this again is because look at some of these names like the Rokus, the Shops, the PayPals, who's a Mr. MSTR, the Netflixes. There's not people who thought those were going to go down 80 to 90%. Sure in the hell, Kathy Wood didn't think it was going to go down $100, $200, $500 a share. Wouldn't be sandbagging some of these negative 70% positions or the rest of the hedge funds. So again, guys, we don't know. All we can do is trading has always been a game of probabilities and managing risk. You can go into the market with the plan, but at the end of the day, man, anything can happen. And the stuff that I've seen in 2.5 decades trading, it just never ends. There's always some sort of drama. The crazy happens. Would I write anything off at any time here? No way. Anything can happen at any time in the markets. We may end up losing for 50%. I don't have the answer and no one else does. One thing I did want to bring up that I thought was pretty interesting. I seen this one going around the internet a little bit here. I'm obviously coming from CNBC or one of those outlets here. I didn't realize this myself, that this current decline far outpaces the wealth that has been lost. I mean, like the dot-com was like 4.6 trillion, global financial crisis 2.3, COVID sell-off 4.5, 7.6 trillion. And one of the longer drawn out market corrections that we've had. Now, to think like something would just come to a magical end, like a COVID, like this, is probably wishful thinking. I don't think what we saw back then is going to be something that we see now. We still have a lot of problems that are continuing. If you're still headed to the gas station paying $6 a gallon for gas, if everything you're buying is tripling in price, and you know, again, we're talking about shipping companies that are delivering you your food and everything else. How are they driving across country in those big rigs with gasoline prices like this? It's a killer for everyone. And as we're in this 40-year historical high inflation, there is consequences to be paid. Now, back to what I said at the very beginning, and then I'll move on to something more actionable here at this moment. There was never a script for what we had with COVID. You know, COVID was a once-in-a-generational event for the markets themselves. So the Fed and the central banks just threw money at any rate to save this market, taking cues from what they thought they learned in the financial crisis. Let's just print, save the market, save people, save the world. There's a consequence to this because they had never ever printed so aggressively. They never had cut so aggressively. So now what when they don't do that anymore? What do we do? And again, we're still in this phase, as I've said, with every weekend edition of Market Mutterings. The market's still in discovery mode. It's still trying to find out what it is, where it should be. Now you got a nice bounce here, just a little past the 20% level on Friday, which was a start. That's a potential start, but I would caution everyone at this point, don't think this is done. I mean, this could spawn a rally, but don't think that the worst is behind us and we begin to rally and go green. Let's just do one step at a time. I think you just reached a very oversold level. You got into a nice zone technically right here that goes back to March of last year. So there was a lot of things pointing into it. And you not just did that, you started out in that direction where you had sold off, getting aggressive on Friday or selling off. The stars were aligned for a nice little rally. If you were trading it, I caution you to just trade it as that. It is just a rally, right? You're just renting stocks for right now. Don't fall in love with them, because in order for something like this to stop, you're going to need a bottom to set in. You're going to need a couple of tests of that bottom. It's not going to be what we typically have seen. Now, so again, I would caution you of doing that. Now, that doesn't mean we can't move back up technically. I think there's still 4,200 possibly here. But again, we'll see how the week starts. It wouldn't be my advice or my first move is to just dive in here early long on a Monday thinking the worst is behind us, if that's what you're thinking. I still think one of the things we need to see get taken out of this market is these rug pulls. If we're really looking for a sustainable rally, we have a lot of rug pulls, and for you new traders that may not know what that lingo is, rug pull is a definition for something that is moving up, and all of a sudden it just dumps real quick. You're getting too many of those still, even on big names. The action on some of these big names like AMD, NVIDIA, Adobe, they're trading like OTC penny stocks a lot with these instant rug pulls and wipeouts. So that's something that's going to have to work itself out of the market. But what does that mean, guys? It's a sign of volatility. Volatility is a sign of indecision and confusion, and that's how the tape will always trade. So keep those numbers there. If we end up going lower than this, then maybe that's where we end up. But I did think that somewhere between 20 and 30% would mark a short-term low. Let's see if that's true. Now, when it comes to things like the coins, and I'll probably end up offending a lot of coiners here, but I'm just going to tell you how I see it and what I think. And man, I tell you what, I could be wrong. So that's the way it goes. Every reason I thought for a Bitcoin or other coins to rally, I think you had the perfect setup. You had record high inflation. You still do. So if people were going to be using it as an inflation hedge, it makes perfect sense. When you see governments or other countries being shut off from banking systems like Russia, when that conflict started, property being seized, it seemed like the perfect asset to stash cash, to stash value. It wasn't. It wasn't at all. In fact, what they did is bought greenbacks. The dollar went on a rally. The dollar is the strongest currency, not cryptos. So in the end, the only thing I can come up with here in my mind, which again, guys, could be wrong, but cryptos are just a risk-on asset. If the markets are rallying and people are throwing darts at everything and NFTs and things taped, bananas taped with duct tape to a board for $100,000, if they're just doing that, then okay, it probably goes higher. But other than that, it's just another trading instrument that's a risk-on asset. And you're in a risk-off market. And look at the chart. It shows. So I don't know what your beliefs are, you're thinking of it, but this thing is a shitter right now. And it's had every excuse in the book to rally. And I've never been any more bearish on these coins than I have been right now. Man. But, hey, I'll give them a chance to see what they're going to do here. But to me, correct me if I'm wrong, there's no difference in trading this than the NASDAQ. It looks just like a chart of the NASDAQ or a chart of Netflix, right? So anyway, let's move on and talk about some individual names. Nothing is standing out here. You had a big rally, NVIDIA, a nice little bounce here. Lulu, a nice bounce. But some of these have already so quickly have gotten away. Like they've already rallied 2 to 3 days. So I can't see, like for a Docky, I can't see the reason of buying this up $25 per share than where it was on Wednesday. That makes absolutely no sense. Even if it goes higher, that's not a long-term investment strategy. That's not a viable, usable strategy. So I don't see anything in the world of stocks as still compelling. This says, okay, you should be buying these. You can do whatever you want with your money. I personally need to see more testing of a rally. So what I'm looking here more than just a specific instrument is I'm looking for, number one, the rug pulls to stop. Some of the volatility and the pace of the back and forth action in the markets to slow itself down. That to me would show fatigue that this 4.5 month sell-off is running out of sellers. That everyone who wanted to sell has already sold, and we should find ourselves a bottom. But I think at this level, this deep, that's gone this long, this is also one of the longest in terms of months corrections that we've had in a while. It's not something that's just going to fix itself overnight. We've got far too many problems for that. And we let that, again, the COVID, post-COVID rally, we let that go on too far. Again, when you're printing free money, it sounds great, but there's always a consequence, and now we're dealing with a consequence. At some point, it will end. Longer term, the market will always find its way back, but that doesn't mean it has to do it now. It doesn't have to do it at any specific level. If it wants to sell off more, then that's exactly what it will do. It remains to be seen, but what we're looking at now, I don't believe is quite the bottom yet, but we'll see. Anyway, guys, I hope you learned something from here. My advice to everyone is be careful don't chase anything. Just don't chase anything at any of these levels. I don't think the worst is behind us. I think you'll still see a couple of pullbacks here where you can get some good entries, and there will be some good ideas, but for the short term still, it's a trader's market. Everything you're doing is a rental. Don't fall in love with these names. They don't have to bounce here. They don't have to continue their bounce. Nothing has to go up, and stocks don't always go up. Anyway, take care, trade well. I'll talk to you guys soon. Cheers.